What's up, everyone? It's Hey John, and today, oh my God, that's the only thing that comes to mind. Are we going to be seeing another Terra Luna fiasco happen? But this time, it comes in a temperature form, and it's called Celsius. Celsius. 1.7 million people call Celsius their home for crypto. You can see here, folks, it's backed by ETH, has Bitcoin assets, it's collateralized. Don't trust, ask. Don't trust, verify. All the ways to earn free crypto. Well, doesn't all of that sound amazing? You put some money or crypto into Celsius and voila, you will get some more cryptocurrency, whether it's in Bitcoin or a fixed APR rate, whatever it may be. But you have to wonder, how are they supposed to be generating this revenue? And all of this is based off of the market continuing to go up. When we see the market continue to pull back and continue to fall on the wayside, we're seeing these collateralized assets lose their value and they are generating less revenue. And when that happens, well, we are seeing right now, folks, it's unfolding right before the markets. We're seeing Terra Luna. First, it was UST, an anchor protocol, vamoose. Overnight, your money disappeared. Celsius doing something similar, but this time it isn't an algorithm doing the algorithm thing. This is a person doing it. How many of you actually invested into the Celsius protocol? Let me know with a comment down below, and of course, like this video so we can share this information with more people on YouTube. Celsius Exodus, 320 million in crypto sent to FTX. User withdrawals paused. As they say, not your keys, not your crypto. This is what happens when you put your cryptocurrency inside a platform where you don't have your keys, so it's not your crypto. The whole point of DeFi is to be your own central bank. It is to be your own guardian angel to protect your investment and your money in this case. And this is why I always tell people, DeFi, get your keys, get your wallet, put it in there, whether it's a cold storage, hot storage, whatever you want to do, but make sure you own your keys. The allure with all these platforms is that it's convenience. You log in, it's all there, it's securitized for you. But at the same token, what happens when the market falls apart and these collateralized assets get attacked? Well, we're seeing it right now, folks. They pause your account and they move money into a different exchange. And ladies and gentlemen, is not looking too good. We are seeing a liquidity crisis in Celsius where they are unstaking 247 million in wrapped Bitcoin on the Aave platform and they're moving it into FTX. And you have to ask yourself, why are they doing this? When they stake on Aave, that's how they're creating and generating revenue to pay you guys back on Celsius. So if they are unstaking it and they're moving it into FTX, well, how are they generating revenue for all of you? Ever since Anchor and Terra Luna came to light with all of their issues, users have started to vocalize that, hey, Celsius, you're doing something similar. You are mismanaging and misappropriating the funds. So what's going on? We demand answers. People are saying that, hey, you know what? If Celsius fails, that means STF, a synthetic Ethereum, it will also get depegged because it comes from the Lido decentralized platform. And you will see a further depegging of Ethereum. Right now, we're seeing literally everything unfold, domino after domino after domino. And you have to understand that all these protocols, they use each other to monetize each other. So it's literally having Paul pay Peter and then Peter pays Paul. But of course, if Peter defaults, then Paul is, wait, how do I pay Peter if Paul didn't pay me? This is, wow, what's going on? Is crypto having an issue with liquidity? Is crypto having an issue with their validity? And all of these high APRs, all of these high interest rates, we all knew that they are not sustainable because they are all tapping into each other. And now we're seeing STF continue to depeg from Ethereum, even as of this recording. And do you remember what happened with UST and Luna? Same thing. UST was here, and then Luna was here. And then when UST depegged from, you know it, the dollar, it continued to spiral and spiral and spiral. And then, well, it never recovered. Everyone thought, hey, you know what? It's okay. It's going to recover. But at the same token, it was producing more and more Luna. But of course, in this case here, it's a different scenario, but it's very similar. When you see a depeg and it continues to depeg from Ethereum, well, ladies and gentlemen, this is going to cause a snowball effect of everyone trying to sell their stuff and get out, because we're seeing a mass exodus. And this crypto winter is, it's pretty cold, guys. It's freezing if you ask me. Celsius withdrew 50,000 Ether and 7,000 WBTC collateral from its Aave position in core DeFi wallet 06ACE. 6,000 wrapped Bitcoin and 20,000 Ethereum so far have been sent to FTX after receiving 169 million in USDC from FTX. This is very interesting. Why would you unstake your Aave position where you are getting your interest and then you are moving it over to FTX, and then FTX gives you $169 million. Could this be an OTC trade, an over-the-counter trade? Is Celsius trading in their volatile assets, Ethereum and Bitcoin, for a more stable USDC? It sure looks that way. But if this happens, how are they supposed to pay out the revenue to the Celsius holders? Or is this a move to make everyone whole as they close out and destroy Celsius? Well, wasn't Celsius' mantra to say, hey, do not trust the bank? So the worst case scenario here, from what I can see, is that, you know what, if Celsius evaporates overnight, hey, you know what, at least they got USDC money and they are able to pay back some of the users and make them whole. But if this happens, ladies and gentlemen, we're going to see accelerated regulation, and there is going to be a good need for it, because as of this moment, we're seeing tons of shady stuff going on in the cryptocurrency market. And if these things continue to domino effect, ladies and gentlemen, this crypto winter can last, I would say, a very long time. And this time when it happens, you are not only going to see tons of money evaporated overnight, you're also going to see tons of trust lost in crypto, because now we're seeing on the headlines, Terra Luna, money vanished overnight. Celsius, possibly the next Terra Luna. And then who's next? These dominoes, they are getting closer to tipping, and all they need is a little boop, a little tap, and it's all done, folks. Crypto lender Celsius pauses withdrawals due to extreme market conditions. Yeah. These extreme market conditions are, yes, true in a sense, but the truth is, users were claiming that Celsius was already misappropriating funds and they were mismanaging the funds. So this is a great backdrop to say, hey, you know what? It isn't us, it's the market. Everything's messed up. So we just got caught with our pants down. And obviously, this is crypto. Nothing is regulated. And all your money, well, it can evaporate overnight. And this is why you're seeing a mass exodus. It's continuing to happen right now. You're seeing everything down over 30% in 7 days. Bitcoin is down 27%. Ethereum down 36% for the week. Holy moly, BNB is down 29%. Cardano is down a whopping 26%. Not even VITAL can save it. Dogecoin, my first love, is down 34.7%. Holy cow, the markets are literally bleeding red, and it's just a bloodbath out there. We also need to pay attention to geopolitical activities as well. We're seeing China and Taiwan, we're seeing Russia and Ukraine. Could this be the backdrop of another Black Swan event? And now we're seeing constant inflation. This means that the Fed will have to increase rates dramatically, and maybe even possibly higher than they were initially thinking of the 50 basis points. If this happens, folks, holy cow, prepare yourself This is going to be a long ride. Make sure you guys like, share, and subscribe. And most importantly, stay safe, and I'll catch you all on the next one. Shh.